In this video, traders, we're going to look at the 50-day moving average momentum explosion trade. Interesting one this, stay tuned. Hey traders, a very warm welcome to you. Thank you for tuning in. Okay, so looking at some of the archives, some of the old textbooks, dusting them off, looking at some of the strategies they used years ago to see if they're prudent and useful in today's market conditions. And I found some that I think are. They could at least be used as a foundation for more trading strategies for the right market conditions. This one is based on the 50-day moving average momentum explosion trade. So the theory of this, by the way, this is on a daily time frame. It's for swing traders. You could use this on any market, stock, index, commodity, crypto, anything you fancy. Pretty useful on this, right? The idea of this is that very often stocks, markets will come down, they'll start kissing the 50-day, up above it, down below it, oscillating around, not much happening. But then all of a sudden, supply demand comes in, bang, one way or the other. We see a good explosion in one direction. And the idea is we're trading in the direction of that momentum, managing the risk, of course, but we're looking for that continued explosion after buyers or sellers have tipped their hand and tipped the supply demand balance one way or the other. All right, so these are the rules. The first one is today's range must be greater than the prior 9 days. So in this kind of rough example here, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9 days of trade. Today's range has got to be bigger than the highest one of the 9 days. So if the previous 9 days, the most was 50 pips, it's got to be more than 50 pips or whatever we're trading. So we're looking for that kind of move. So this, a decent range, and range is just the high minus the low. That will be the criteria met for number one, today's range being greater than the prior 9 days. Okay, now number two criteria, today or yesterday the price has got to be less than or equal to the 50-day moving average. This is where the 50-day comes in. So the price has either got to have been, as I said, today or yesterday at or below that 50 days. So it's got to have been flirting around with that level at some point recently. And they're saying today or yesterday, that's fine. So this happens to be today, I've drawn it, or it could have been yesterday, no problem at all. Right, so what we do now is tomorrow we buy above today's high. Now, what do I mean by tomorrow and today? So we should have maybe called it day one or day two or the explosion day. Let's call it the explosion day. So this is the explosion day or day one. Let's call it day one for ease of writing on the board. That's day one, and that's today or the explosion day. So we're looking for that. We're looking for the range to be decent. We're looking for that tag of the 50-day. And we see that. So that is really giving us all the filter we need to place the trade. Okay, now the next day, which is day two, we're going to be buying above that day's high, plus a few ticks. So whatever we're trading, if we're trading Forex, maybe want to be 10, 15 pips. If we're trading Dow, maybe only 20. If we're trading DAX, whatever. You've got to adjust this slightly based on the market you're trading. If you're trading Bitcoin, maybe you want a bit of a decent cushion above that high so that you're not just getting faked out on noise. The point is day two, we're now buying above here. So this is where we're going long on day two. And that's the hope what's going to happen. The stop is going to be today's low minus 25 ticks. And we're saying today is day one. So your stop is going to be here. And I'm saying 25 ticks. Again, use a bit of discretion with that. Say, okay, I don't want it right at the low. I want it just below that low. So I'm not going to ping that necessarily. I just want to get taken out if the momentum trade isn't really valid. And this is what it is. It's a momentum trade. You're looking for that play, looking for that break. So just to summarize, quiet kind of week, sitting there, chugging along, not doing much, or 9 days to be precise. Then all of a sudden, it doesn't have to be quiet, to be honest. It has to be, that's not really a criteria, but generally this is what it's all about. It's about sitting in that 50-day and exploding one way or the other. We get that range momentum, or range expansion, should I say. So we get a decent range that's greater than the prior 9 days for point one. Then we also have obviously the criteria that we've been tagging that 50-period moving average. We then buy the day after we've had that explosion day, and that stops us. Hey, if this doesn't really work out, let's say it tries to explode and fakes out and kind of just sits there and goes back and closes in the second half, and the next day is an inside day, it's cancelled. It means don't get involved in it, which is good. If it does carry on and gives that momentum, we buy on that continued momentum. Look for the breakout, look for this range expansion to continue for multiple days or weeks, hopefully drag that stop up below that Lotus stop is being faked out, and hopefully the risk reward ratio on this one is going to be quite good. All right guys, that's an interesting one, 50-day moving average momentum trade. Let me know if you can spot anything that applies to. It's obviously going to depend on the market conditions. If you're in a big bull market, you're not going to get that. If you find some stocks that are coming rotating back to that, maybe it's flagging up a few that are worth looking at. Thumbs up if you like this kind of stuff. Comments in the comment section below. As always, take care, keep the risk managed. I'll see you soon. Good trading. Bye-bye.